Hi, everyone. Thanks so much for joining this press call this morning on Trump's tariffs. We have Senator Murray, we have Barry Barr, the founder of KAVU in Seattle, Chuck Horne, the CFO at Uwajimaya Asian Market, Erik Nelson, the founder of HDG Building Materials in Vancouver, and Alex Jacquez, the Chief of Policy and Advocacy at Groundwork Collaborative. After we hear from all of our speakers, there will be time to answer any questions from any press in attendance. We'll ask press to please use the raise hand function so that we can call on you if you have a question. This call is being recorded and will be distributed widely. So with that, I am going to go ahead and turn it over to Senator Murray to kick us off.
Well, thank you for joining me today.
Progress.
We're here to explain how tariffs work to a president who clearly doesn't understand what he is doing and doesn't care whether his policies bankrupt families and small businesses. Now, earlier this year, when Trump announced an all-out worldwide trade war, the response was swift and furious. Oh my God, he can't be serious. Oh no, this is going to end my business. This is going to drive up my grocery bill. And of course, is he really that stupid? Well, after months of chaos, months of businesses trying to figure out what policies they actually need to build their plans around, months of pointless uncertainty driven by Trump, spouting off new tariff rates, setting new deadlines, and turning tariffs on and off like a 2-year-old with a light switch, Trump's day of tariff reckoning is now upon us, as many new, painful taxes are going into effect on goods Americans buy every single day. For all his talk about trade deals, apparently a good deal to Trump is this: Americans pay more. Because that is the basis of every so-called deal that Trump has announced so far. American families paying a whole lot more than they were paying just a few months ago. Beyond that, it is impossible for us to really understand what the deals Trump is announcing even are. As usual, he's making all sorts of outlandish claims like that Japan is going to invest $550 billion in the U.S., or Europe is going to buy $750 billion worth of American energy, only for us to find out from these other countries that these numbers are totally made up, or that huge parts of his so-called deals are non-binding and unenforceable. And then there are all the other countries across the world that Trump is unleashing massive new tariffs on every day. So unfortunately, the answers to the questions everyone had when Trump first announced his trade war are now all too clear. Yes, Trump is serious. Yes, he is that ridiculous. And yes, he is about to send costs for families and businesses skyrocketing. Because that is what tariffs do. And you don't have to ask a Nobel Prize economist to understand it. In fact, that's the point of this call. I want to lift up the voices of people on the ground in Washington State, which is one of the most trade-dependent states in the entire country. 40% of jobs in our state are tied directly to international trade. I want everyone to understand how businesses are being hurt by this chaos and how prices are going to go up. This is the reality that our reality TV president doesn't seem to understand. Look, I want to support American manufacturing and American jobs. We all do. But that's not what Trump's trade war will accomplish. It will actually do the exact opposite. In fact, it's already killing jobs and dragging down economic growth across the country. It will cause small businesses to raise prices, and some of them will shutter altogether. The entire premise of this trade war is unimaginably stupid. There is no making it in America when the it in question is coffee or green tea, which we cannot grow at scale here in the United States. There's no making it in America when even making something here requires parts and raw material from across the globe. There is just higher prices for working families, tighter margins for struggling businesses, and more worry for families and businesses being pushed to the edge. And one of the most remarkable things about all of this, which Republicans are being dead silent on right now, is that just weeks after showering trillions in tax cuts on billionaires, what Trump is doing here is putting new taxes on everyday Americans. Trump is taxing our groceries. He's taxing baby essentials. Trump is taxing back-to-school supplies. He's taxing electronics and cars and video games and just about anything you can think of. Trump wants to call them trade deals, but the reality is he is slapping sales tax after sales tax on working families. So my message to Republicans, you just passed legislation to cut taxes for billionaires. Do you really want to raise them for everyone else? I've been saying it since the beginning. I will keep saying it until this pointless trade war finally ends. Congress needs to step in, and we need to assert our authority on tariffs. There is no good reason for us to be picking fights with our trading partners, and especially our close allies like Canada and the EU. There is no good reason for us to let Trump raise taxes on families. There is no good reason for us to let Trump bankrupt small businesses. We need to end this chaos. We need Republicans to say enough and vote with us to reverse these tariffs. And they don't have to just take my word about how important this is, because I have some people here today with a firsthand perspective on what is at stake. So with that, I'm going to turn it over to Barry Barr, founder of KAVU, which is one of the many great companies based here in Washington State.
Thank you, Senator Murray. It's an honor to be here today to discuss the real negative impacts of the American First policies on Washington State businesses. Senator Murray, I'd like to thank you for your tireless fight for all the Washington businesses back in DC. We really appreciate it. My name is Barry Barr, president and founder of KAVU True Outdoor Clothing. I'm a fourth generation Washingtonian. I founded KAVU in 1993, making hats, clothing, and accessories in Seattle. KAVU still produces products here in White Center, Seattle, and have for 32 years. We are already seeing the negative impact of the trade war for our U.S. products, increased prices on our cotton canvas, zippers, threads, and buckles. Even if we wanted to expand our production in the USA, we would have to purchase sewing machines abroad, as the U.S. does not make them. Therefore, the machines would be hit with the higher tariffs, making it entirely too expensive to import. As a small company that innovates, we have no choice but to raise our prices due to the tariffs. We have currently seen a 10 to 25% increase in our retail prices, which will hit consumers in the coming months and next year. And I don't see any reprieve with the new sweeping tariffs announced today. We just received our fall 2025 production, which we sold and purchased back in January 2025. The standard tariffs on some of those goods from China are 32%. We build that in. But you add the existing tariffs of 37.5, that equals 69.5% we pay on the arrival of the goods to the USA. How does this look? Take a $20 shirt from China at 32%, that's $6.40. Now we pay 69.5, which is $13.90 per unit. No company can absorb such a high spike in costs. These policies have taken almost all our working capital out of the company and is making it incredibly hard to survive, let alone be profitable. Right now, all our projected profits are going directly to the US government in the form of increased tariffs. In reality, these are working as a tax on businesses and American citizens. This is not fair to either the businesses or the consumers. We're having to raise our prices to our customers as the only option to stay in business. And therefore, we're seeing a decrease in sales. This means that we're now facing tough decisions, such as having to cut positions and employees that have worked for the company for over 20 years. In addition, we are seeing a huge negative impact around the world on US brands. Most consumers worldwide have united against the USA and USA brands, and we are suffering huge losses in future international sales due to the tariff war. This is especially noticeable in markets where we have worked very, very hard to enter for decades, like the United Kingdom, Scandinavia, and other countries in the European Union. Businesses in all sectors need stability. We manufacture 6 to 8 months lead times, and these unnecessary duty swings does not allow us to plan and execute our goals. What we need to thrive is stability and not chaos. Thank you again, Senator Murray, and I'd now like to introduce Chuck Horne from Uwajimaya.
Thanks, Barry. Good morning from Seattle. Uwajimaya is one of the largest Asian grocery retailers in the Pacific Northwest. And in a familiar classic American story, Uwajimaya was founded by immigrants in 1928, is still family owned, and is led by the direct descendants of those founders. So when talking about tariffs, I think it might be useful to inject some reality into this conversation. And few things are more real than food. As a specialty grocer, Uwajimaya sells a lot of product that's imported from Asia. And just to make sure that everybody understands this, a tariff is in effect an import tax. It is paid to our government, not by China, not by Japan, but by importers here in America. And while these fall especially heavily on companies like Uwajimaya, tariffs affect all grocers, even the large ones, even those who don't import as much as we do, but all grocers. So some people argue that the companies should eat the tariffs. The reality is that grocers operate on razor-thin margins. And we're a private company, so we don't really share our financial results. But if you want an idea of this, you can review the large publicly traded grocery chains. Go look at Kroger. Kroger has Fred Meyer and QFC in Washington State. Go look and see those margins. And what people need to understand is that for every dollar that a consumer spends in a grocery store, after that grocer pays its suppliers, takes care of its employees, pays the rent and other expenses, there might be of that dollar 2.5 to 3 cents left. And that's before the grocer has to pay any interest and loans to banks, and of course, income taxes. So all said and done, out of the dollar that the consumer gives to the grocer, there might be 2 cents that are left. So a new tariff basically increases the cost that that grocer pays for the product. And if the grocer eats that cost, they're not going to make any money. They may lose money on that item. And so it is hard for grocers to eat the higher cost. Having said that, a grocer must consider its customers. Sure, there are some customers who do very well, and for them, a higher price might simply be an annoyance. However, we have many customers, particularly senior citizens, shopping with us for decades, who live on fixed, modest incomes. Because they don't have much, if any, extra money, increased food costs can cause meaningful hardships for them. So for a thoughtful grocer, it's a balancing act. We have to sustain the business while being considerate of our customers. We're not looking to profit from the situation, but it's a challenging set of circumstances. And unfortunately, the challenges in navigating this have been made even more complicated by the absolute chaos we've all seen since April. We will figure this out. That's what we do, and we have talented people. However, our time could be much better spent on other more productive activities. So with that, I'm going to pass the baton to Erik Nelson.
Hi, sorry about that. This is Erik Nelson. Thanks very much for that. I'm honored to be here. Happy to talk about the real impact of tariffs for my company and customers. HDG Building Materials supplies premium grade product for commercial, residential, and civic construction projects across the U.S. We support architects, landscape architects, builders, developers, and owners. Our product lines include structural pavers, decking and siding, stone, aluminum joists, and Busan pedestals. And HDG and Busan support projects in places where you've probably walked. If you've ever stood on a roof deck on a hotel, restaurant, or bar, you've likely stood on one of our systems. Busan pedestals are used to create a raised level walking surface over sloped roofs. They're also used for pool decks like those at the Four Seasons Resort in Oahu, where the movie Snatched was filmed. These pedestals were recently tariffed at 30%, and they're now at 15%, which, while that helps, it still functions as a tax on U.S. businesses and customers. Other real-world examples that we use that use our products, like the Burke Museum, uses Kevany siding from Norway, a sustainable alternative to tropical hardwoods. Snoqualmie train station features Resista, a composite made from rice husks, which is it's a German engineered material made into siding and deck boards made in Malaysia now. And this material is used in Starbucks storefronts and here in Vancouver at the Vancouver clinics. In Boston, South Station uses HDG custom cut and finished granite and pavers to minimize their labor costs. We deliver job-specific, ready-to-install pavers and bench assemblies that fit. This minimizes or eliminates cuts and labor costs on site, making those projects affordable. The Kirkland Transit Center public art installation called The Beach uses imported granite and basalt, and if built today, that project would face steep tariffs, increasing costs for transit agency and for taxpayers. What does that mean? Kind of what are the ripple effects? One thing is we've had to apologize to clients mid-project. A customer in Colorado ordered custom cut and finished stone from China, originally priced under a 25% tariff from 2017. But by the time it shipped, the rate had jumped to 55%. These swings erode trust and margins. And it's not just tariffs. We've experienced the weaker dollar. Weaker dollar adds 6% to our costs on recent shipments from Europe. These increases compound. Contractors mark up our prices, and consumers feel it in their final prices. And the bigger picture is this, though. It isn't about protecting U.S. manufacturing. The country lost large-scale stone fabrication capabilities, for example, a century ago. In many cases, we import what we no longer produce. Tariffs on those materials don't bring jobs back. They simply make construction more expensive. HDG pairs the best global materials with U.S.-made products whenever possible. We support American manufacturing and innovation, but we also need access to world-class components to stay competitive. So in summary, tariffs and currency instability drive up costs, shrink material options, delay projects, and they stifle innovation. We say let U.S. businesses compete on quality and value using all their resources rather than with one hand behind our backs, owing to artificially inflated prices caused by unpredictable trade policies. With that, I'll turn it over to Alex.
Thanks, Erik. Thanks for having me. I'm Alex Jacquez. I'm the Chief of Policy and Advocacy at the Groundwork Collaborative, an economic policy think tank in Washington, D.C. And I wanted to zoom out just a little bit and take a look at the macroeconomic picture and what we have learned and what we have seen since Trump announced his Liberation Day tariffs in April and going through today, where many of those tariffs that were paused were reinstated across our trading partners across the country. Just in the last couple of weeks, we've seen economic data that very definitively prove that these tariffs are having major headwinds. They're imposing major headwinds on the U.S. economy. Just this morning, labor market survey came out showing that we added fewer jobs than we expected to, and also that we had major revisions for the last two jobs reports, meaning that our economy has been weaker in the labor market for the last 3 months than we thought it had been. If you look under the hood, the entirety of our jobs creation is being driven by healthcare and education, two sectors. Everything else is either frozen or down. President Trump says he wants to bring back manufacturing. Manufacturing jobs have decreased the last 3 months. Construction, logistics, warehousing, all of the jobs that you would associate with an industrial boom are either frozen in place or they are down. Companies are not hiring as much. They are slowing down. People are exiting the labor force, and the job market is just getting weaker and weaker, coming off of an extremely strong 2024. In prices, we've seen hotter inflation in the last inflation print than we have in months. And in particular, for the sectors that you would expect to be impacted by the tariffs. I'm thinking furniture, appliances, consumer electronics. Those prices are rising. They're rising more quickly than they have since 2022, when we saw the last big spike in inflation. And what that is doing is we are not reshoring any production here to the U.S. We are not finding alternative supply chains. So what this is doing is raising prices for consumers at the end, or it is raising prices for our manufacturers. As discussed, these are 40% of our imports are for manufacturers who are then exporting products, just making their businesses less competitive with these kind of blanket on again, off again tariffs. And then we saw the gross domestic product economic numbers come in slower in the first half than they have been in 2024. And again, if you look under the hood, you see an economy that is slowing down precipitously. Consumers are spending less. And I think it's hard to argue against doing that when you don't know what your prices are going to be in a week or a month. They are backtracking on big ticket items like buying a car. They are backtracking on purchases of imported goods. And what we're seeing is companies drawing down inventories that they had brought in before the tariffs took effect and starting to reach the end of their rope. That might be okay for large companies who have been able to hold off on price hikes or layoffs or be able to stretch their margins. It's not going to be okay for small businesses. As noted, not operating on large inventories, not operating on large margins, and having to make those paychecks work week to week, month to month. I think that is where we are going to see the real impact. So if you add it all up, and the Federal Reserve said as much on Wednesday, the economic uncertainty that has been injected into the economy by Trump's trade policies have had a negative effect on employment and jobs, a negative effect on growth, and a negative effect on prices. All of this starts to add up to something that looks like stagflation, which should be just another headwind for the economy. And meanwhile, none of the goals that President Trump has advanced through his tariff agenda have come to fruition yet. All we are doing is hurting workers, hurting businesses, hurting manufacturers. With that, I'll turn it back over, and I think we'll open up to questions.
Thank you all very much for laying out the case and showing what's happening to businesses and people in our economy because of this inflation. And Naomi, we'll turn it back over to you for any questions that reporters would like to ask.
We'll go to Sarah Wolf with the Columbian.
Hi, thank you all for having me. I know, Senator Murray, there was legislation earlier in the year, gosh, it seems like a millennium ago, to combat these tariffs, and that was not successful. Do you think that there could be another effort to submit legislation on this topic going forward?
That legislation is out there. We are waiting for Republicans to join us. We absolutely are capable of getting that passed. We need Republican co-sponsors and their willingness to say no to President Trump. This is not working for their families and their businesses in their state, and to join us. And if they do, we can get this passed. So far, they've been reluctant.
All righty. I'm going to do one last round for questions, either raise hand or you can just ask it directly. Great. Not seeing any other questions. I'm going to go ahead and turn it over to Senator Murray to close us out.
Yeah. Thank you again to everybody who participated on this. It is so important that people understand what is happening, why prices are going up, and that we don't have to sit back and just complain. We can do something, but we do need Republicans to join us in legislation for Congress to take over the tariffs and repeal these so that we can get our economy back on track. I will keep working on that effort.